The Modi government announcing arguably its most decisive step in combating a slowdown that has taken the country's GDP growth rate from 8% to a 6-year low of 5%. Now, corporate tax rates in India were among the highest in the world at 35%. They've been slashed to around 25%, a drop of 10% for existing companies. New companies that are incorporated in October 2019 or later, which are involved in manufacturing, stand to benefit even further. But the move is going to cost the government 1.45 lakh crores in the amount of revenue it will have to forego annually. India Inc. welcoming that move, saying the most immediate impact will be to improve overall sentiment. But perhaps the big question now, is this going to be enough to revive the animal spirits in the economy?
The Prime Minister described the corporate tax cuts as historic and that it would be a great stimulus to make in India, create more jobs, as well as a win-win for 130 crore Indians.
A lot more investment, lot more employment generation, lot more economic activity.
The major tax reform comes amidst a sharp growth slowdown, a job crisis, low domestic investment and consumption. Many investors and business persons responded by calling it a mini-budget. What the government has done is to divide corporate tax between established domestic companies, where the effective corporate tax rate has been cut from almost 35% to a little over 25%. There will be no minimum alternative tax, but the only condition is that no other exemption will apply. A new category for new companies has been set up. Here the tax rate will be just 17%. In addition, the minimum alternate tax has been cut from 18.5% to 15%. The enhanced surcharge has been removed on capital gains of equity sale if sold by individuals, HUFs, BOIs, etc. The scope of CSR's 2% spending has been expanded. It now covers contributions to universities, IITs, government firms, national labs, promoting SDGs. There will also be no tax on share buybacks announced by any company before the 5th of July 2019. The FM made the big announcement at a press conference held unusually just before a GST Council meeting, where the focus was going to be on cutting rates for vehicles and other stretched sectors. Mrs. Sitharaman, however, shifted the focus sharply to making business in India a lot more competitive. Till now, India's corporate tax rate of about 35% was one of the highest in the world.
We want to have more investments and make in India, which itself means a lot more investment, lot more employment generation, lot more economic activity, almost at par with many of the Asian and Southeast Asian countries in terms of the corporate rate taxes.
A big endorsement came from India's biggest car manufacturer, a sector which has seen an unprecedented crash in sales. Its chief told NDTV that the cuts were excellent steps for investment in manufacturing, and this gives elbow room to companies to reduce prices.
This bold set of corporate tax cuts that the Finance Minister has announced will actually allow us to get out of the vicious cycle and into a virtuous cycle of investment and growth.
Such a big reform that I don't know how to quantify it. Extremely good times from here, Diwali onwards into 2020 and beyond, on equity as an investing class, and the overall economy will start to pick up with a lag effect.
Several businesses and experts are hoping that more reform and tax cuts will be announced to help consumers, ordinary folk, directly.
Looking at GST, I think GST is very difficult for the government, but I do believe taxation on automobiles is very, very high. Many people have talked about it already, they have different views, but GST is very high.
This is nothing else but another installment of crony capitalism and loot of India.
Another panic reaction to tide over choppy Sensex index instead of laying down sound economic vision.
I rise to present the budget.
The last couple of months have been a roller coaster ride for the Indian economy. A controversial budget, growth slowing to a 6-year low, tanking markets. The government responded with some key budget rollbacks as well as easing foreign investment. But today's tax cuts outweigh all that. With Sunil Prabhu, Chetan Bhattacharjee for NDTV.